If you have been looking for the most effective top-down analysis to trade and become profitable in 2025, then you are lucky to come across this video, because in today's teaching, I'm going to be exposing straight to the point the most effective top-down analysis that you can apply for the highest level of effectiveness and profitability in 2025. Okay, so I want you to grab your pen, grab your book, and take note of every single thing I'm going to be talking about in today's teaching. Let's go, guys. We are going to start by talking about what this top-down analysis is. It's important to note that top-down analysis entails the art of reading the markets regressively from the big time frames down to the small time frames and collaborating all the information gotten from these big time frames and small time frames to predict the future movements of prices. Okay, by now, you all should know that we use what is known as a pure price action trading system. That is, we go onto the charts and we don't use any third-party information, either the fundamentals, either indicators, either bots. We don't use any third-party information. We strictly use what is known as a pure price action system. That is, we go onto the charts and we now apply a systematic process known as a top-down analysis system, where we read the markets regressively, go onto the big time frames. We go to the highest time frame available to us, which is the monthly time frame, which we always call the top level of the penthouse, and that's time frame allows us to see the overall city. The overall city in this case is the charts. Okay, it allows us to understand every single thing going on the charts, long term. And we are now going to collaborate the information from the monthly time frame, the weekly, the daily, and take all of those time frames to the small time frames like the 1 hour, the 30 minutes, the 15 minutes time frame, to look for a real-time trade entry opportunity. Okay, for you to be profitable in 2025, I assure you that the best system that you can be able to apply for profitability is top-down analysis. Okay, you must have gone onto the internet and see so many funny strategies. Okay, but the most effective, whereby you will feel like a trader and not a gambler, is applying what is known as a top-down analysis system. What are the time frames involved in this top-down analysis system? We have the big time frames, and the big time frames are the monthly time frame, the weekly time frame, and the daily time frame. And we have the small time frames, which are the 4 hours time frame, the 1 hour time frame, the 30 minutes time frame, and the 15 minutes time frame. It's important to note that the big time frames are unique in itself, while the small time frames are also unique in itself. That is the big time frames have their own purposes, while the small time frames has their own purposes. Just like we can see right here, the big time frames allows us to know the overall direction of prices. Whenever I go onto my charts, we start from the monthly time frame. Remember, we read the markets regressively. Okay, it's an organized system of approach. We start from the monthly to the weekly to the daily, 4 hours, 1 hour, 30 minutes, 15 minutes. Okay, so it's organized. Okay, so the monthly, weekly, and daily time frames allows us to know the overall direction of prices. It allows us to know where price is going for the next 1 year, where price has been going since about the last 20 years, and it can even allow us to be able to predict where market is going for the next 20 years. Okay, so but beyond that, it allows us to know long term at minimum. Okay, for the next 1 year, this is the probability of where price is going to go to. Okay, so what we are now going to do is that okay, on the big time frame, we have seen where price is going to overall. So what are we going to do? Our job is just to tap into an opportunity. Okay, and most times we tap into an opportunity riding the flow of the market. What is the flow of the market? That is we are picking an opportunity in the direction of the overall trend. Okay, there are few times where we can trade retracements. That is, we are trading against the direction of the overall trend, but usually it's better to trade with the direction of prices. That is, you are trading with the flow of the market. Okay, in that case, you are going to have more wins in comparison to trading against the flow of the market, which could give you a couple losses depending if you are smart about it or not. Okay, so the big time frames allows us to know the overall direction of prices. It also allows us to know the overall structure of prices. Okay, when we go on to the big time frames, I'm able to know if the overall structure is a bullish structure, which will entail missing what a clear coordination of higher highs and higher lows, or if what prices is what is on a clear bearish structure, which will allow me to see a clear coordination of lower highs and lower lows. Okay, so I'm now able to use this information, coordinate this information with what I get on the small time frames. We're still going to come back to that. So on the small time frames, we said we have the 4 hours, the 1 hour, the 30 minutes, and the 15 minutes time frame. Okay, so what are the effectiveness and the usefulness of these small time frames? It allows us to know the real-time direction of prices. Okay, so that means that what the small time frames is where we pick our trades. Okay, we can't pick trades on the big time frames because our stop loss is going to be crazy and our risk reward is going to be silly. It's not going to make any sense. Okay, so but on the small time frames, it allows us to know what the real-time direction of prices. So since I know the real-time direction of prices, I can enter for a good intraday trade, for a good day trade, and for a good short swing trades. Okay, which are the type of trades we take: intraday, day trade, and short swing trades. Okay, so because of what collaborating this information, okay, and coming onto the small time frames, we are able to know the real-time direction of prices, and we're able to place a trade and take an opportunity within the real-time direction of prices and have what good risks to reward and close within a day, 2 days, or less than a week, depending, if it's a short swing day trade or intraday trade. The market is what will offer us that opportunity. Obviously, the small time frames are also our entry time frames. That is, we only pick our entries on the small time frames. In fact, personally, I love picking my entries on either the 30 minutes or the 15 minutes time frame, okay, in comparison to the 1 hour and the 4 hours time frame. And this is because the 30 minutes and the 15 minutes time frame, these are smaller time frames. So these time frames will give you a better risk to reward. Okay, a trade that you would have picked on 4 hours that will give you 1:2 on the 15 minutes, if you had been able to get the entry on the 15 minutes time frame, could give you as much as 1:7 risk to reward. Okay, by just going down time frames and studying prices on smaller time frames. Okay, so one might ask, why don't we use the 5 minutes and the 1 minute time frame? This is because our data have shown us that that the structures formed on the 5 minutes time frame and on the 1 minute time frame are not rigid enough. Okay, they are not concrete enough for us to put our hard earned money into. Okay, we are traders here and not gamblers. Okay, we are proper traders. Okay, so we feel that those time frames are not solid enough. It's our data that showed us. It's not something I would just woke up to and decided. Data showed us that, okay, break of structures you see on the 5 minutes, these break of structures have not happened on the 15 minutes time frame, and most time the break of structures on the 5 minutes will not be effective. It won't last. Okay, so this is what this has shown us. Okay, so one more thing I'm going to be talking about in regards to our time frames are what? Okay, for the big time frames, if the big time frames are giving us an overall buy direction, this means that what on the small time frames, if we are picking that buy, okay, if we go onto our chart and we are seeing a buy position, it will mean that what we are buying in the direction of trend. Okay, and what are the beautiful things, or what are the advantages of buying in direction of trend? It means that what you can swing for longer, you can trade for longer, and take profits at the Fibonacci 100.0 level. Okay, remember that the Fibonacci, we have the Fibonacci retracement levels and we have the Fibonacci extension levels, right? So for a Fibonacci retracement level, the 61.8 level ends a Fibonacci retracement level, okay? While for a Fibonacci extension level, extension means you're trading in the direction of trend, the 100.0 Fibonacci level ends it. If you go to TradingView, you might see it as 1 instead of 100.0, but at least you get the concept, okay? So in my last video, I also taught that. So you guys can check my last video, on that. Okay, so for the big time frames, if the big time frames are bullish and on the small time frames, we go onto the small time frames and we are buying, it means we are buying in the direction of trend. If the big time frames are bearish and we go onto the small time frames and we are selling, it means we are selling in the direction of trend. Okay, if the big time frames on the other hand is bullish and the small time frames are giving us a quick sell, it means we are selling a retracement. This means that we should watch out for the 61.8 level, because 61.8 ends a retracement. Okay, and if the big time frames are bearish and you are buying on the small time frame, you should know it's a quick opportunity. Yeah, and you should grab your bag and go out. Okay, the tools involved in top-down analysis. If you want a more detailed explanation of all of this, I have everything written in my course in video and written formats, and you can be able to access that with the link in the description below. Okay, so the tools involved. One, we have the Fibonacci. We said that what the Fibonacci is a retracement and an extension tool. It allows us to know where a retracement might be ending and where an extension might be ending. So what we said that what the 61.8 fib level ends a retracement and the 100.0 fib level ends what an opportunity in the direction of trend, also known as an extension. What is the next? We have the trend lines. What are trend lines? Trend lines are diagonal support and resistance tools. They allow us to know what if a trend is still strong. Okay, if there's a violation of a trend line, it could mean weakness in that particular trend. Okay, so what is the next? The next is what? Horizontal support and resistance tools. Horizontal support and resistance tools are important as they allow us to know areas of support and resistance on the chart. This allows us to be able to buy at support levels and sell at resistance levels. It also allows us to be able to take profits. For example, if we are selling and prices gets to a support level, you know you are supposed to take profits. And if you are buying and price gets to a resistance level, you also know you are supposed to take profits. Okay, so what is the next? The next is what? Potential reversal areas. Potential reversal areas are made up of a couple things, okay? But what are these areas? These are areas that prices gets to and price may not be able to go beyond. For example, if you are buying and price gets to a potential reversal area, you know you want to take profit and wait for a sell position, okay? Or maybe you are just sitting back and you are looking for it. You want to enter a trade position. If market gets to a potential reversal area, you know that what? That area, if there's a break of structure at that area, you know that it's an opportunity for you to get into a trade entry position. Okay, so potential reversal areas could be made up of the Fibonacci 61.8 and 100.0. It could be made up of the trend line area. It could be made up of sensitive support or resistance levels on the chart. And what is the last tool involved in top-down analysis? We have the chart structures. What are chart structures? Chart structures are the coordinated movements of prices on the charts. Okay, whenever you go onto your charts and you see this movement of candlesticks, they all move in structures. Okay, and we all know that for the structures we have a bullish structure and we have what? A bearish structure. So for us to get a trade entry opportunity, we must see a break of structure. A break of structure is what confirms a trade entry opportunity for us. That is, if we see a bullish structure and there's a break of structure on that bullish structure, we know there's an opportunity to sell. And if we see a bearish structure and there's a break of that bearish structure, we know there's an opportunity for us to buy. So the chart structures is the backbone of what our top-down analysis. So now let's go on to the real life charts, and we are going to apply every single thing we just talked about on a real life chart. Remember, we said we run a multi-time frame top-down analysis system, and we said we are going to take prices from the monthly time frame down to as low as the 15 minutes time frame to look for a trade entry opportunity, and it's going to be in an organized regressive approach. Okay, so what is the first thing we do on the monthly time frame? The first thing we do on the monthly time frame is to try to see where prices currently is. Okay, so clearly we can see that this level right here, all this zone here is where price currently is. So we can be able to just put a shape right there. This shape can also be known as an horizontal support and resistance tool. So we can use that to identify where price is currently at. Then the next thing is to understand the structures that took prices to that point. Okay, so this GPJP were on the monthly time frame. If we go back, we can see that forever since about 1975, GBP/JPY has been bearish. Okay, you can see all this very bearish trend. It has been bearish forever, and price is still moving and making clear structures of lower highs and lower lows. Okay, so without any doubt, on the monthly time frame, price is clearly bearish. It's very visible without any conversation at all. In fact, forever since about 1975, price has been falling, and it has continued falling till this day. Okay, so what are we going to do? We are now going to read the structures, okay, that took prices to the real-time points that we identified right here. So what are the structures? We can't be able to take it from the highest point, so let's just take it from somewhere. Okay, so here we can see what? Push exhaustion. Okay, then we can see another push here, an exhaustion right here. We can see another push here. We can see a first exhaustion that came in, but that was not enough to send price to create a lower low. Instead, prices came, grabbed another higher low, then tested equal level right here. Then what the prices do? Created the lower low right here. Remember that what? Anytime prices goes back to test 61.8 for the second time, be ready for a sporadic sell. Okay, that is what in this case of a bearish structure. Okay, in the case of a bullish structure, if prices test the 61.8 the second time, be ready for a sporadic buy. Okay, but here price is clearly bearish on clear structures of lower highs and lower lows. Here also prices came to the 61.8 the first time, it couldn't sell and create a lower low. Instead, what the prices do, it came a little bit low, then grabbed an higher low here, then price is currently testing 61.8 for the second time. Okay, so now let's bring this Fibonacci out to see, if history is about to repeat itself. So I'm going to bring up my Fibonacci from the highest point right here to the lowest point right here. So we can see that prices came around the 61.8 zone. This is the 61.8. Prices came to the 61.8 the first time here in the past. It was not enough to send it to create a lower low. Then what the price do? It came around 61.8 again. It's important to note that 61.8 is a zone and not a pinpoint area. So if you see price trading above 61.8, so far it is a retracement. Okay, price is clearly bearish. So we know that all these buys are just retracement. So we know that what 61.8, like we said, ends a retracement. So prices came to 61.8, but that was not, the first was not enough to create a lower low. So it came low, now went back to 61.8, and we can see a very sporadic sell to create a lower low. Okay, so in similar fashion, remember that the market repeats itself, and that's why we are able to use what the future movement of the historic movement of prices to predict the future. Okay, so right now, what are we saying? We are seeing a similar thing happening right here, where prices, came around the 61.8 for the first time here. It came around the 61.8. It didn't touch 61.8 pinpoint, but like we said, 61.8 is a zone. So it came around the 61.8 here. That was not enough to send it low. It grabbed an higher low in similar fashion also. And right now, it is testing the 61.8 zone for the second time, which is now the real-time point where price is currently at. Okay, so since it's testing 61.8 for the second time, there's a high probability that these retracement structures that took price to 61 points for the second time, touching 61 points for the second time, we know that a crazy sell is coming. So we are set for that. Okay, because price is on the second touch of 61.8, and we know that a very crazy sell is coming. Okay, so what are we going to do? The next thing we're now going to do is that we are now going to take the highest level of the charts. We already understand that all of these bullish moves that took price to 61.8 are only but a retracement that took price to touch 61.8 for the second time. As we can see, this was the first time it didn't touch a pinpoint, but it came around the zone. 61.8 is a zone, came around the zone, grabbed the higher low here, tested 61 points for the second time, and right now it's ready for a sporadic sell. So what are we going to do? We're now going to take the last higher low right here. We can see the last higher low here, and we're now going to take the highest point of the chart right here to look for an opportunity within this window, which will now be known as our range of focus. Remember that all of these bullish moves are only but a retracement, okay, that we end at 61.8, because a 61.8 ends a retracement, and we'll be expecting a sporadic sell since this is the second touch of the 61.8 zone. Okay, so now we're now going to take this window, which will now be known as as our range of focus. And remember that within the zone, right? If we go onto small time frames, if we are selling, it's in the direction of trend, while if we are buying, it is only but a retracement. Okay, so we'll take note of that. So this window will now be our range of focus, and we'll keep streamlining prices into a range of focus until we see a real-time trade entry opportunity. So now we'll take that range of focus to the weekly time frame. So what is going on within this weekly time frame? Okay, so within this weekly time frame, as we can see clearly, this is where we said is our range of focus. Okay, so what is going on right here? We can see prices make bullish structure here of push, exhaustion, small fractal, push, exhaustion, small fractal here, then push, exhaustion. Prices made the push right here, hits this monthly 61 point for the first time here. For the second, remember this is the second touch of the 61.8, and it sends price on a very sporadic break of structure. All of this bullish structure has been broken. This means price is coming down here in the direction of trend, and beyond this, to continue the sell. However, we are knowledgeable enough to know that when a break of structure happens, a lot of times, about 90% of times, instead of prices heading straight to take profit, what will prices do? It will give us an opportunity to enter by going back for a discount to 61.8 before take profit at this level. Okay, so what is this 61.8 level? Bring out our Fibonacci from the highest point right here to this low point right here. We can see that what prices came around the 61.8. In fact, not once, twice again. Always remember the second touch of 61.8 always sends prices for a crazy fall, as you can see right here. Okay, so there was a break of structure. The bullish structure has been broken. Prices went to test 61.8 the first time and what? Tested 61.8 the second time, and we have seen a break of structure that will send prices down to this level. Okay, so now let's read the bullish structure that took price to test 61.8. We saw prices make what? Push. Higher low right here. Then we saw push again to 61.8, and prices broke all these retracement structures that took price to 61.8. Double touch of 61.8, broke structure. All of these moves are just a retracement that will send prices to this level in the direction of trend. So what is our job? Our job is what? How to just tap into a trade entry opportunity. Okay, so first of all, let's identify this level as the monthly 61.8, 61.8, and let's identify this next level here. Remember, this is a double touch of the 61.8 where prices just went for a discount. So we'll just say 61.8 PRA. What is a PRA? A PRA is a potential reversal area, which I just taught you guys. Okay, so what are we going to do? We're now going to take this window from the 61.8 PRA here and take this window to the daily time frame to look for an opportunity within this window. Okay, so on the daily time frame, I'm still going to expand these structures that I just read for you guys on the weekly. Okay, so on the daily time frame, what are the structures? We saw prices start on small fractals here. Okay, then establish big fractals. Remember that what fractals are the likewise movement of structures, right? So we can see that what price started on small fractals, they start making big fractals within the confines of these same fractals, hits the monthly 61.8 and broke structure. Instead of heading straight to take profit, what is it doing? It went back, tested 61.8 for a discount for the first time, grabbed an higher low, tested 61.8 again for the second time and broke structure. So all of these are just a retracement that will eventually send prices down to this level, right? So our job is just how to tap into a real-time trade entry opportunity. Okay, so what are we going to do? Right now, we can see that this support level here is the only support level here that has not been cleared. This support level here has been cleared. We can see that all of this movement cleared the support. So this is the support level here that has not been cleared. Okay, then what are we going to do? Okay, we are now going to take this window right here as our new range of focus. When prices gets to this level, price will now break this level and head here. But this level is a very good entry for us because after prices gets to this level, price might decide to want to make a little retracement. Okay, so what are we going to do? We are now going to look for an opportunity from what? This 61.8 PRA and look for an opportunity that will send prices down to this level, right? Because price has cleared this support. Price just created this low. So this low right here in itself will be take profit 1. Then this low right here will be take profit 2. This was the structure that cleared this low, So take profit 1 at this low here, take profit 2 at this low right here. So what will be our job? Our job will be to read the structures, okay? We can start from the structure that took prices to 61 points for the second time and keep streamlining price into a range of focus until we see a real-time trade entry opportunity, okay? And streamlining price into fractals, right? So what can we see? At the second touch of the 61.8, we saw prices make push, exhaustion, right? Small fractal, made this big fractal, push, exhaustion. Now, this is now the last lower high within the confines of this fractal. Prices came here, made the lower low in clear coordination of lower highs and lower lows. Price is currently here. And from here, we know that price will come here, TP1, then eventually go and make a lower low at this point. There's no support level that can hold prices here. So it's going to be a free fall to this level. So our job will just be what? Okay, where can we tap into an entry? Okay, so we now decided to what? Bring the Fibonacci from the high right here to the low right here, and we saw that, oh, price is trading around the 61.8 zone. So let's just identify the highest level right here, or let's just take all of this level right here as the 61.8 zone, and all of this level here will be what? Will be what? A key or a potential reversal area that will send prices down to this support. Take profit 1, take profit 2. So we identified all this level as what? As 61.8 PRA on the daily time frame. So now let's take this window now, okay? It will be this window from the 61.8 PRA now. Let's take it to here to look for a trade entry opportunity. So we'll take it down to the 4 hours time frame. You can see I'm breaking the markets down regressively in an organized approach, okay? So we brought out the Fibonacci here. It was here to here. We decided that what? All these levels are the 61.0. Remember, 61 points is a zone and not a pinpoint level. Okay, so all this bullish move are only a retracement. So even if price trades above 61 points, it's still going to correct back inside, just like it's happening. Price is correcting back inside, right? So we identify this level as 61 point PRA, and beyond even the 61.8, let's see if there are any support or resistance at that level. We discover that what? Okay, the highest level that prices got to, let's take this out a bit. Prices came around this resistance level right here. You can see this resistance level. Price came around this resistance, which is also a 61.8 PRA zone. But let's just identify the highest points right here. Okay, since prices is already rejecting back into 61.8, so let's just identify all this level here as 61.8 PRA. But beyond the 61.8, there's also a resistance here. So we identified this level as a resistance / 61.8 PRA. Okay, so what is going to be our job now? Our job will be what? To take this bullish movement from the low right here to the high that took price to this 61.8 and resistance PRA, and look for a break of the bullish structure. By the time we see a break of the bullish structure, what are we going to do? We are going to sell to this level right here, the support level, which will be take profit 1, and this level right here, which would be take profit 2. So now let's take that bullish movement to the 1 hour time frame to see if we can see a break of structure. Clearly, we can see a break of structure right here. So what are the structures? We can see price make push, exhaustion, push, exhaustion, push, exhaustion, push, hit this resistance / 61.8 PRA and broke a structure. So this resistance / 61.8 PRA acted in its power, okay, and ended this bullish retracement move. This means a sell is ready, and you can be able to place your sell as soon as the break of structure happened. If you want, you can also go down to the 15 minutes time frame to read the exact same structures, okay? So on the 15 minutes time frame, it is the same thing that we saw on the 1 hour time frame. Okay, so what are the structures? We can read the structures as push right here, exhaustion, push, exhaustion, push, exhaustion, and there was a break of structure right at the PRA. Okay, so as soon as the break of structure happened, you can place your entry pinpoints. If you want, you can wait for a little discount to the 61.8 and continue selling to the ground level. Okay, so for this particular trade, you can place it on either the 30 minutes time frame, the 1 hour time frame, or even as low as the 15 minutes time frame. But let's go back to the 1 hour time frame, and let's focus on the 1 hour time frame for this particular trade. Okay, I had to go to the 15 minutes time frame just to show you that what you can be able to pick your trade on any of the time frame, just like I showed you. But like I said, the 15 minutes is my favorite, but I can still pick my trades on the 1 hour time frame. So here on the 1 hour, let's read the structures again. It is push, exhaustion, push, exhaustion, push, exhaustion. Hit the PRA, resistance / 61.8, and broke the structure. As soon as the structure is broken, you can place your sell. Okay, but prices in all of its glory, what did prices do? Prices went to give us a discount at 61.8. And remember what we said about a double touch of the 61.8. Be ready for a very sporadic sell. Okay, so you can see the first here, you can see the second here. Okay, first touch, second touch, and we know that price is now ready, okay, to sell to as much as this level for TP1, and even go beyond this level to sell to as much as this level for TP2. Okay, so now if you are placing this trade on market opening, how is it going to be? It's going to be a situation of this. You are placing the opportunity right here with your stop loss right here. Then your take profit 1 is going to be at this level here for a 1:2.9, while your take profit 2 is going to be here for a 1:5 risk reward. 1:5 means I'm risking $1,000. I'm going on with $5,000, and these are we trade right here. Okay, or I'm risking, you know, a $10,000. I'm risking $10,000. I'm going on with $50,000. You understand? So this is how it works right here. So this is take profit 1. I'll take profit 1. You can decide to entirely take your profit. You can decide to take half profit. You know, it's just your choice. Okay, but we can see price touch the first time here, touch the second time, we're ready for a sporadic sell. Okay, so but beyond that, where did the break of structure happen? Let's just go ahead to identify it. This was where the structure broke. Okay, we can see that what the last higher low got broken right here. This was the candlestick that broke the last higher low, and price is now ready to create that very massive sell. Let's expand the structures a bit to see it. You can see the candlestick here that broke the last higher low at the PRA, and a sell is ready. Okay, and right now we can see that what from the original entry, okay? If you had known about this strategy, you know, from the original entry, which is just a few pips to where market is currently at, to take profit 1 will be what? 1:3. Then take profit 2 will be about what? 1:6. 1:6, even if you are risking as low as $100, you will go with more than $600 on this particular trade position by applying our very organized and very beautiful top-down trading methodology. So if you are looking to learn more, I have a full course on this where, you know, I taught in several videos in both written and video formats, every single thing without keeping anything on top-down analysis. So link in the description below, and so that you can go ahead, buy this course and learn and master the art of top-down analysis. See you guys in the next one. So we identified this level as a resistance / 61.8 PRA. Okay, so what is going to be our job now? Our job will be what? To take this bullish movement from the low right here to the high that took price to this 61.8 and resistance PRA, and look for a break of the bullish structure. By the time we see a break of the bullish structure, what are we going to do? We are going to sell to this level right here, the support level, which will be take profit 1, and this level right here, which will be take profit 2. So now let's take that bullish movement to the 1 hour time frame to see if we can see a break of structure. Clearly, we can see a break of structure right here. So what are the structures? We can see price make push, exhaustion, push, exhaustion, push, exhaustion, push, hit this resistance / 61.8 PRA and broke a structure. So this resistance / 61.8 PRA acted in its power, okay, and ended this bullish retracement move. This means a sell is ready, and you can be able to place your sell as soon as the break of structure happened. If you want, you can also go down to the 15 minutes time frame to read the exact same structures, okay? So on the 15 minutes time frame, it is the same thing that we saw on the 1 hour time frame, okay? So what are the structures? We can read the structures as push right here, exhaustion, push, exhaustion, push, exhaustion, and there was a break of structure right at the PRA, okay? So as soon as the break of structure happened, you can place your entry pinpoints. If you want, you can wait for a little discount to the 61.8 and continue selling to the ground level, okay? So for this particular trade, you can place it on either the 30 minutes time frame, the 1 hour time frame, or even as low as the 15 minutes time frame. But let's go back to the 1 hour time frame, and let's focus on the 1 hour time frame for this particular trade, okay? I had to go to the 15 minutes time frame just to show you that what you can be able to pick your trade on any of the time frame, just like I showed you. But like I said, the 15 minutes is my favorite, but I can still pick my trades on the 1 hour time frame. So here on the 1 hour, let's read the structures again. It is push, exhaustion, push, exhaustion, push, exhaustion, hits the PRA, resistance / 61.8, and broke the structure. As soon as the structure is broken, you can place your sell, okay? But prices in all of its glory, what the prices do? Prices went to give us a discount at 61.8. And remember what we said about a double touch of the 61.8. Be ready for a very sporadic sell, okay? So you can see the first here, you can see the second here, okay? First touch, second touch, and we know that price is now ready, okay, to sell to as much as this level for TP1, and even go beyond this level to sell to as much as this level for TP2. Okay, so now if you are placing this trade on market opening, how is it going to be? It's going to be a situation of this. You are placing the opportunity right here with your stop loss right here. Then your take profit 1 is going to be at this level here for a 1:2.9, while your take profit 2 is going to be here for a 1:5 risk reward. 1:5 means I'm risking $1,000. I'm going on with $5,000, and these are we trade right here, okay? Or I'm risking, you know, a $10,000. I'm risking $10,000. I'm going on with $50,000. You understand? So this is how it works right here. So this is take profit 1. I'll take profit 1. You can decide to entirely take your profit. You can decide to take half profit. You know, it's just your choice. Okay, but we can see price touch the first time here, touch the second time, we're ready for a sporadic sell. Okay, so but beyond that, where did the break of structure happen? Let's just go ahead to identify it. This was where the structure broke. Okay, we can see that what the last higher low got broken right here. This was the candlestick that broke the last higher low, and price is now ready to create that very massive sell. Let's expand the structures a bit to see it. You can see the candlestick here that broke the last higher low at the PRA and a sell is ready. Okay, and right now we can see that what from the original entry, okay, if you had known about this strategy, you know, from the original entry, which is just a few pips to where market is currently at, to take profit 1 will be what? 1:3. Then take profit 2 will be about what? 1:6. 1:6, even if you are risking as low as $100, you will go with more than $600 on this particular trade position by applying our very organized and very beautiful top-down trading methodology. So if you are looking to learn more, I have a full course on this where, you know, I taught in several videos in both written and video formats, every single thing without keeping anything on top-down analysis. So link in the description below, and so that you can go ahead, buy this course and learn and master the art of top-down analysis. See you guys in the next one.